Hello, good morning, good evening, or good afternoon, whichever country you are in. But at the time when I'm doing this video, this is early morning, and today I'm going a little bit outside of US, actually way outside, and going to the one of the Chinese stock. This is a very famous stock. Its name is Baba. The ticker name is Baba, and most of the time, if you go on uh, this is very famous by Alibaba or and the company. So before when I was so my what okay, if you're new to the channel, my name is Pramod Kumar. I'm a CFA charter holder and FRM certified. I made the couple of financial I made these stocks, the fund using the fundamental analysis, okay, the analysis of the stock, and this is just for the education purposes. I'm not trying to sell anything, and on my blog I have some courses, but that's purely at the moment for CFA candidates, where I teach the CFA level 1 as well. Okay, so if you like my video, please do subscribe to my channel. My target is to reach the 1,000 subscriber, and please like the video as well, and there are tons of videos available on my channel. So okay, so without any delay, so let's get started. This time I did a little bit different on the presentation, so it's easier, I believe. Hopefully you like it. Okay, what's my agenda today, right? So my agenda for this ticker Baba is I'll go over the Alibaba digital economy and more on the PE and their PB ratios, top return ratios. Will go first. As usual, we go from the top first, trying to understand the company. Then we go on the top ratios like return on equity, PE ratios, return on assets. Okay, and then we look into deep into the financial statement, for example, income statements and cash flow and balance sheet. So what I did in this video, I analyze all these using the 700, and if you notice here, okay, 780 page the document, and take the jewels out of it and show it, and then concluded my analysis. And this is just my opinion, and don't just act on my opinion, go and buy or something. This is just sharing the knowledge based on what I read and my background. I understand this, and based on that it suits my portfolio, but everybody has their different needs, right? So okay, and then is there any share purchase or cloud computing focus that I will cover as well on this one. So you might be thinking, oh, what about cloud computing? Since this is more like Amazon of kind of a company in China. But that's what actually I was thinking as well before when I analyzed this talk. But then I have found out. Let me get started. Okay. Okay. So this is the whole Alibaba digital ecosystems, right? So they are not in just the commerce space, right? But if you notice here, the retail commerce space in China, they are in these categories. You also, AliExpress is also by them. Alibaba is very famous. These are all the wholesale commerce, and then this is across borders and global commerce and within China, and they are also in digital media and entertainment, right? Alibaba Music, so, and Youku, they are doing some innovations initiatives. Consumer services, some are hard to read, LME and all. Logistics and new retails, data and technology digitals, right? Alimama, which is marketing, service and data management. They're also in Ant Financials with payment services as well. So this is quite a wide diversified company. And they're also in quite a, one of the reason this is I also like this talk is they're into the cloud computing as well, which is the future from the technology perspective, right? And I'll show you what's their ranking in the cloud computing. But just a high level, right? Major of the revenue is still coming from the commerce, and I read it 61% is coming from this sector, and rest is coming from other. Okay, so that's it. So so this is this Alibaba holding company, which it's mentioned here. So this is the whole ecosystem itself. So it's not just in ones. They are very broadly and diversified in multiple segments. So that's what it's all about. Okay, so that's the big picture of the company. So all the way from the, you see they are in the Ali Health and so on. Okay, so let's get started, right? So okay, so in this slide I'm showing you the PE ratio and the price over book ratio, right? So the blue color, it shows the PE ratio. So I have took from 2015 from the left to the latest, right? So if you notice, the PE ratio is 53 times of the earning, right? The price over earning in 2015. It drops to 17, then jumps to almost 43, 46, 36, and 23. So it's quite a like a hill kind of a, right? It's up, down, and then up and coming down recently. Price to book over ratio, I'll notice it's keep decreasing. It was $8. So basically price over book, how much price as compared to its book value, right? So it's dealing right now, it's almost 8 times. Then in 2018 it's almost 7 times, and now it's even below. So it's, historically, if you see from 2015 to now, it's the lowest at the moment. So which is a little bit of good news as well, right? Because which is not that bad as this company is giving exposure. And one more thing, this is one of, I also searched some other Chinese company in terms of the market cap. For example, there are other famous companies like Tencent and a few others, which is quite popular now, or Baidu as well, right? Which is a good search engine. But this is the way beyond. This is the mega large cap company, right? In terms of the market cap, around 577 around billion at this time. Okay, so at the time when I'm doing this video, so and other companies are way below on the market cap. Okay, so that's another positive point. So they have a good market or good value. Okay, so let's go to the maybe okay, sorry about that. I think okay, I just realized that the latest, because of my picture, it was not showing clearly. So I thought maybe this change it little bit. Maybe I'll try to move my picture or hide it if that's the case. Okay, so I think now is a little bit better. So you can see okay, what I was saying, and I also, it's clear to see here, it's below 5. So it's historically low, the price over book ratio, which now I think you can see clearly, and the PE ratio is also historical. As if I ignore the 2016, it's not bad as well, right? It's under 25, but it's a little bit but still it's quite good as compared to its historical, if we compare. Okay, so let's continue. So the next one is, let's see if we have what's the return on equity coming, and then we'll go more deep dive into these ratios. Okay, so the yellow one, or this is the return on equity, right? So this return on equity and the return on investment capital, right? It's, if you notice, it was huge in 2015, and then it spiked in 16, but it's drops and then it's keep consistent. It's still not bad actually. Its return on equity is 16% as compared to the US stocks, which I compared, did the fundamental analysis earlier. So far, whatever I did it, like Facebook or Apple, is nowhere near, right? Those are huge in terms of the return. And if I'm not and so far I haven't seen that low on the return on equity side, as per the depend upon the global presence, only except yesterday, where I did the Uber, which is purely a negative in terms of the rating. But all other companies, if you go on my channel and see those fundamental review on those have much better return on earning equity or return on investment capital as compared to this Baba. But those are in the US market. But if you this one has a global presence, but mostly these are this is traded in the US market, but it is mostly is in China and near that region area, right? So if you want exposure to that market, especially given the coronavirus time, right, and how the other countries will be doing. So I think US, there is a report yesterday that US economy or Canadian economy won't do well in terms of the return for few years, but other emerging countries might give better returns. So this is one of the way to look into that stock as well, right? If you want to do that kind of a broad comparison. But we still need to keep and monitor on the coronavirus in the Chinese economy, right? How it affects there, but just keep our focus on this company. So if we see that it's significantly dropped, but it's still okay, it's not that bad as well. It's 16%, right? And the return on investment capital is okay, and the return on assets, it was significantly down. The asset, so basically the asset which the returns they're generating, so it's a little over 10% or 10%, because 10.18 as of 2019. Okay, so let's see what's happening underneath the water. Okay, so if we see from the income statement, right, the revenue growth and the net income growth, right? So this is from 2019 on the left, so it's quite big, right? So it's keep growing. So think from this 2015, 16, 17. So then the revenue is keep growing and growing significantly, right? If you see, it was only around here in 10,000 is 10 billion, and then here it's around 60 I believe is a billion perspective, right? But and the net income is also growing, but not that much as comparing to the revenue, right? So that's we can see easily from this chart. But if we skip from 2016, which is a different spike, but other one is keep consistently growing from 2015, a little bit up, 17 and 18, and this is a little bit awkward, right? It goes up and down, something like that, but still not bad. So the revenue growth, again 2019, if we see in terms of the percentage, if I start from 2015, it was over 40%, then it come down to below 30, significantly down, and then it's spikes up in 2018 again to over 70%, which is a huge spike in terms of revenue. Look at from below 30 to 70, and then it drops back, which is pretty bad, right? Just over 40%. So it's pretty much almost from 70 to almost half. It's come down in terms of the revenue growth. Okay, now let's go deeper into the margins, right? We have seen the revenue growth and other. So what's taking up this? Okay, so is it more the gross, where the margin is cutting? So we have here the gross margin, right? This line, the orange kind of line is EBITDA, right? Operating margin. And then we have a net income. If let's go from the gross margin, which is 2015, and it's 2019 here, right? So more recent year is here. So notice this from 2019, right? This is increase, but then it's continuously decreasing, right? In 2017, it's or 19, it's below 50%. So 20%, almost 20% down from within 5 years in terms of the revenue growth. The operating margin or EBITDA margin, right? Was below 40% and it's reduced to below 30%. So operating margin is also reduced, but not that significantly like a gross margin. The net profit margin or net margin, right? The bottom line, it's quite weird. Here, basically, when I looked further into it in 2016 spike, why my revenue is above, or my net profit margin is even above the revenue margin, there is other incomes which they have. So that's why the net, although my EBIT margin number is lower, but my non-profit, it's non-operating incomes increase my net profit by significantly. So that's why it's a spike. So this is like a more like a one-off kind of a thing, which we can ignore. But other than, if you can see from 30 to 28, and it's still over 25%, right? So it's within that range. So it's not drop, and it's dropping, but not that. It's above 25%. So it's pretty good in terms of net profit margin. So I see from that perspective. Okay, so from the income statement we have seen, and one more thing I like to add here when I come to this profit margin. Okay, one more thing I like to highlight here is that when I did this analysis using my spreadsheet, right, on the Baba stock, this 2019, right, this profit margin, basically this is, I was seeing from where it's coming, even my revenue is going down, but it doesn't go that much. So basically they get the benefit from the tax effective tax rate, right? So if you notice from 2015 to 2019, they are mostly in 20%, right? And even this spike here in 2016, right, this spike. So not only so I'll come to this one, but this was the effective tax rate. So basically they pay the less, they need to pay the less tax at these years, which significantly contribute to their net income, right? So this can say, so 20 to 15.8%, which is a way low when we talk about the profit, right, in terms of the huge dollar value, right? So that's how it is. Okay, so that's one thing I find. But other than that, I believe they are pretty consistent in, and also their assets turnover ratio, right, and that's also contribute that as well. So it was 0.34 and it's 39%, so 4-5%, but it's less there on 2019. But mostly it's because of the effectively the tax rate. They retain more earning and pay less tax. So that's I like to share here. Okay, now if I come from the income statement to the liquidity ratio, so this is very important, right? So this is very this is dropping. So see from the other side, from 2015 to 2019 is here. This is the latest one. It was huge in terms of cash or the current assets, right? The blue one is the current ratio, and then the quick ratio, and then the cash ratio, right? So the margin between all threes remain the same, right? But good thing is that is above 1 even in 2019. So at the time when we are doing this video, right, the coronavirus time, it should not have much impact on this, because they have enough liquidity in the market, enough liquidity in the company to cover its the short-term debts. So that's even very conservative on the cash ratio, showing that, right? So if they have a $1 cost, they have a $1 in terms of the cash. Think from that perspective. Similarly, I try to do that from the cash flow to the total debt. So this is again from the 2017 to 2019. So it shows again the same picture from their balance sheet, right? The cash is significantly reducing. Maybe because they are investing a lot, in the other companies, as you can see in their when they are doing a lot of digital ecosystem, right? So which tell the story, but it's still not bad, right? It's just close to 50% of their total debt. So this is very conservative ratio I try to put here to see how much cash at the moment, not just to cover the interest, but just their total debt if they want. And that's pretty good. I really impressed how much the cash. I like the companies which has more cash, which pretty much, if I compare from here on the short term basis to the long term basis, more on the solvency side, right, it's doing quite well. Okay, so now this is, I'm trying to see here more on the quality in terms of their earning. So if I go from 2000 again from the 15 to the latest 2019, the annual report, we notice the blue is from cash from operations, right, and this is the net income. So their cash flow is quite high. Okay, so this one shows the comparison, right, how much the cash flow they have as compared to their the net income. Okay, so this is my operating cash flow, and this is quite significant, the cash they have as compared to the net flow. So this one is also showing that it's doing quite well in terms of the cash as well. Okay, so the next one is really, I like it, and this is from their share repurchase plan. I just did a cut and paste rather than go and search, which waste I find a lot of time. So in 2017, basically, what they mention in their annual report, that we announced the adoption of a share repurchase program in aggregation amount of $6 billion for a 2-year period, right? So this means the company is going and buying back, right? And we have out of that we have repurchased approximately 10.9 billion of our ADS. So ADS is mostly because this is not a US company, so it's equivalent to that's how basically the mechanism to issue the shares in the US market. So they did it 1.57 billion in an open market with under a purchase adoption this plan, and this is further explained there. And as of this report, in May 2019, our board director authorized a new share purchase program. So this is a key, right? So they have further have 6 billion. So the company is thinking that the price in the right now is lower, right? So if company is going and buying another in 2 years, so definitely you will see the share price will high. So this is a big plus, right, in terms of the share recommendations. And $6 billion is a lot of money if you buy now. For sure, if the company will go and buy, the share price within 2 years, the share price will go high for sure. And if you keep aside all other factor as well, right? So that's a very good point. And also other point is, if I summarize, if I see from their cash flows, liquidity side or their net income side, right? Liquidity side very good. Their margins are also very good, and on top, it's not just one. It's very innovative and diversified company, right? So, and it's doing very good in all other sector, and it has a brand. I see as a brand as well. So they're all other factor, and one important factor also I like to show in terms of the cloud computing, so which is a future, right? So this is from their document. It's I take it out that it's published in the source IDC semi-annual public cloud service tracker 2018, that Alibaba Cloud is the China's largest provider of the public cloud services by revenue in 2018, right? So this is not a small thing, right? This is big. So if the US company, for example, Amazon or IBM, we know the China market is very strict, right, for outside the company, US company especially, and Alibaba is a very big and they have a lot of cash, we notice. So if they grow and get those set up that platform, not only in this, and then they further has a world third, and on the world ranking as well, right? They are world third largest, and Asia Pacific largest infrastructure as a service, right? In terms of the cloud. So as per the market share, and this is not a small source, this is a Gartner market share IT services report. So so that's my on the cloud. So this is another big plus point. So not only we get the the Alibaba or the Chinese market share, but also we get the Asia Pacific side or the cloud computing share, which is the future, right? The future is on the cloud, as what people say as well. Okay, and that's it. I think to summarize, thank you for this video, and kindly subscribe and like. I want my channel to grow at least 1,000 subscribers, so I'll seek your help in that. And if you like it, kindly subscribe and like this video, so more and more it goes higher in the YouTube ranking, and more people will see and appreciate it. Thank you for your time to watching this video, and see you soon in the next video. And if you want any other video to me to cover, please put in the comments. Thanks for now. Bye.